Hello, and happy Friday. It's the end of the week, which means it's time for the Security Token Show. We're your hosts. I'm Herwig, Konings, of course, joined by my co-host, Kyle Sonlin. How are you this week? Welcome back from Singapore.
Thanks, Herwig. It feels good to be back. Unfortunately, I had some technical difficulties after being away from my apartment for 2+ months. So my webcam isn't set up, so you've got to deal with me on the traditional Mac webcam here. But aside from that, Herwig, everything's good, and it feels so nice to be here in sunny, or in this case, rainy Miami, Florida.
Well, we did just have a little hurricane on the other side of the coast swing by, so that weather's expected. But I got news for you, Kyle. Don't worry about the camera because you look great. We do have a great show to get into. So before we do, there was another big event as well last week, Kyle, Solana's Breakpoint conference, where they covered a lot of new announcements and all things Solana. And we've actually got Nick Ducoff from Solana here on the show to hear it from the horse's mouth, if you will, about what went down. So let's get into that interview.
Welcome, everyone, to another Security Token Show interview. This time we are joined by Nick Ducoff from Solana Foundation. Nick, how are you today?
I'm doing great. Thanks, Jason.
Absolutely. You guys just had a very, very exciting event, Solana Breakpoint, over in Singapore. Tell us about the conference. Tell us about how it went, the kinds of people that you saw, trickling in. Tell us about Solana Breakpoint.
Yeah, it's always such an inspiring conference. This year, we had over 6,000 attendees from all over the world join us in Singapore to talk about the exciting things happening in Solana. And I had so many inspiring conversations with builders. That's really what it's all about, is supporting the folks that are building on the Solana blockchain and helping grow the ecosystem.
Yeah, that makes sense to me. And I know that tokenization of real world assets is a theme that is, growing amongst really anyone in the Web3 space at this point in time, kind of as things have evolved with institutional adoption. Before we get to that point, though, how would you say the reception was of that particular topic at Solana Breakpoint?
Yeah, I think it was very well received. I think that was one of the key takeaways from Breakpoint this year. One of those takeaways was Solana is global, and another is that the institutions are coming. And I think that message was felt by everyone that attended.
Got it. So there were a series of announcements that were made at Breakpoint as well. Some exciting ones, including, for example, Franklin Templeton's mutual fund filing and so forth to expand to Solana here. Tell us about some of the most exciting announcements that you found exciting and that you think are kind of a catalyst for Solana as a whole.
Yeah, there were almost too many to talk about, but I'll talk about 4. One is Franklin Templeton, as you mentioned. Another is Securitize, Societe Generale, and then Citigroup. But starting with Franklin Templeton, like you said, they announced that they plan to launch a money market fund on Solana. For those that don't know, Franklin Templeton is a top 20 asset manager by AUM with $1.7 trillion. And their on-chain Benji offering is the second largest tokenized treasury product on-chain with about 435 million assets, according to RWA.xyz. And Mike Reed joined us on stage to talk about Solana's technology, including obviously the high speed, low cost, and incredible architectural innovations like token extensions, which make it just incredibly easy to issue permission tokens on the permissionless public network, as well as development tools in the ecosystem, which is why Franklin Templeton chose to build on Solana.
Very cool, very cool. And what was the SocGen news there? How does that relate to Solana?
Yeah, so Societe Generale, which is about the 20th largest bank in the world by deposits globally, their digital asset subsidiary, SG Forge, announced that they're adding support for Solana, starting with the launch of a MiCA-compliant Euro stablecoin. They call the EUR-CV, the Euro convertible stablecoin. And as the first MiCA-compliant stablecoin issued by a bank, that's where they're starting, but they plan to go beyond that to offer tokenized security products on Solana, including smart cash, structured products, and bonds.
Wow, really exciting. So this is a theme that we're seeing, grow as well as multi-chain assets. Benji itself is already on multiple chains. Glad to see it'll be on Solana as well. And then with SG Forge, again, some of these assets are things that could, leverage different blockchains for different purposes. In your opinion, what is Solana's, special sauce, I guess, that institutions would, kind of tap into for their use cases?
Yeah, the thing that I say is come for the tech and stay for the liquidity. On the tech side, obviously, Solana is a high-performance blockchain, is incredibly fast, very decentralized, and we have new programs like the Token Extensions program, building on the prior token program, Token Keg, which makes it now much easier to issue permission tokens on the permissionless public network. It has necessary features like season freeze, really helpful features like interest-bearing calculations, also allows for easy KYC allow listing, and a variety of other functionality as well. And then on the liquidity side, this past year, Solana flipped Ethereum on a number of key dimensions, DEX volume, NFT volume, stablecoin volume. In the month of May alone, Solana accounted for 2/3 of all on-chain stablecoin volume. That month, it was about 2.4 trillion of 3.6 trillion total stablecoin volume on chain. And this is why, before Societe Generale announced they're coming to Solana with their stablecoin, PYUSD, PayPal stablecoin, came to Solana from Ethereum mainnet. On Ethereum mainnet, it had, I think, around 300 million, and then fairly quickly added another 600-700 million on Solana, getting them to about $1 billion in total TVL of the stablecoin. So I think Solana is an incredible ecosystem, and in addition to that tech, as I mentioned, you've got that deep liquidity.
Jeez, wow. So there's a lot that we're tapping into here, right? You guys have the tech itself. You have an ecosystem of people that are looking for assets such as these to touch on, which increases great for the issuer as well to see more activity. What are there certain asset classes that you're seeing, whether institutional or from other issuers? Are there certain asset classes that you're seeing are being deployed on Solana more than others?
Yeah, I mean, that's interesting. I mean, I think it generally tracks what you see in RWA generally, which of course, stable coins, private credit, treasuries, and real estate. There's of course a much longer tail of really high quality assets on Solana as well, beyond those 4 major categories. But I think it generally tracks, what I would say is the assets that perform really well on Solana is assets that want to move, right? That want to be useful in DeFi, to be borrowed and lent against, that want to trade high frequency, right? Like this is why Jump is building the new FireDancer validator client for Solana. Is Solana has just incredible tech specs, and the FireDancer validator client has performed up to 1 million TPS in testnet, which is just mind-boggling. And it allows folks, to be able to, trade these valuable on-chain assets in a manner that performs much like, today's traditional financial rails.
Yeah, absolutely. Now, with that, we are focused on a chain here, but there's another topic that's come across, which is cross-chain. And this kind of touches on Securitize's announcement. Can you expand a little bit more on, what that is? I think it was with Wormhole, and how Solana, kind of helps either facilitate or just be a part of the ecosystem in general for that partnership? Yeah, for sure. So Carlos Domingo from Securitize, which is the leading tokenization platform here in the US, which has brought over $950 million of value on chain. And they're also the tokenization partner for BlackRock's BUIDL money fund, which now is, I believe, the largest on-chain money fund, roughly equivalent in size to Franklin Templeton's Benji money fund that's coming onto Solana. They've also tokenized, I believe, funds from KKR and Hamilton Lane as well. Worth noting that Libra Capital, also on Solana, recently tokenized a Hamilton Lane private credit fund on Solana, as well as Brevin Howard's flagship hedge fund. But Securitize announced at Breakpoint that they're partnering with Wormhole for interoperability, enabling seamless cross-chain transfers for Securitize's assets while still remaining compliant. They also alluded to bringing other assets natively onto Solana, but I'll let that announcement kind of be made at a later date. Really interesting. Yeah, and that opens up again, cross-chain interoperability for these assets. It adds utility, and you're no longer siloing off the asset to one ecosystem or another. It's a little bit easier to be able to tap into different utility and use cases. Excited to see what the other assets being tokenized on Solana will be. We did cover the Libre news as well with the 3 funds there. So excited to see what changes from there, what evolves. With that in mind, Nick, there was a lot of that happened. It sounds like from Breakpoint, we were getting notifications left and right. What do you think that will happen over the next year, and what do you think the topic or the main theme will be for Solana Breakpoint for next year?
Oh, wow. That's such an interesting question. Listen, I think technology generally, when you use any technology, what do you want from that technology? You want it to be super fast and super cheap, right? And any kind of wave of technology that we've ever seen before, ultimately the winner in each category ends up being, the fastest, cheapest, version of that core technology. And, inspired by Ethereum, right? Toli Raj and the founding team at Solana built the Solana blockchain to kind of take and enhance, what was an incredible innovation by Vitalik and the Ethereum team to take that smart contract blockchain and make it a high performance smart contract blockchain, which is now what you see today. And so I think that you'll continue to see more high quality assets come to Solana. I think you'll continue to see technological advancements of the blockchain. The whole vision is to make the blockchain perform as fast as the underlying hardware will enable it. Obviously, with Moore's law, the hardware gets better every single year, and so thus the Solana blockchain gets better every single year. That's all continuing to accelerate. And so I expect next year's Breakpoint, just like this, to have been the biggest to date. I expect next year's to be even bigger and better than this year's. By the way, it'll be in Abu Dhabi.
Ooh, that was good to know. Good to know. So you guys are already ahead of the curve here. You're already planning next year's event, which is really exciting.
Tickets are already on sale. They're $199 right now for the early bird. So don't sleep on that.
Absolutely. Well, there you go, everyone. You heard it here. We're breaking down Solana Breakpoint, and there will be another Solana Breakpoint to attend to next year in Abu Dhabi. So fantastic. Thank you so much, Nick. Is there any parting thoughts that you'd like to leave our audience?
I would just like to say, if you want to join the likes of Franklin Templeton, Societe Generale, and Securitize, please reach out to me. I'm at Nick Ducoff on Twitter, and I'm at Stoically Sol on Telegram, and would love to chat with you and talk about how to bring more quality RWA onto Solana.
Fantastic. Thank you for your time, Nick. Appreciate that. It sounds like a lot happened at Breakpoint, and we're really excited to continue breaking it all down and see what else evolves on Solana blockchain as the year continues. But with that, we'll be transitioning on to the next section of the show. Thank you so much, Nick.
Thanks, Jason, for having me. Talk soon.
Wow, Kyle, what a set of updates there from Solana Breakpoint. Obviously Solana made its name in meme coins, but I got to say, I think they're about to make themselves a huge name in RWAs from what we're hearing.
Yeah, it is conference season, man. I mean, the hype and the vibes are actually very positive right now around the world. That is exciting stuff. Solana leading the way.
Well, now we've got some market movements where on this segment of the show, we cover everything that's happening in the market. We want to tell you about all the latest RWAs that are coming online, if you will, as well as what's happening already on the secondary market. And I got to start off with a good one, Kyle. We have some news here from INX and Bakkt. And Bakkt is, of course, well known for having tokenized a number of public equities in the United States, right on the stock market, including Google, Microsoft, Tesla, I think GameStop. But now they've announced, we covered the fact that they're working with INX. INX, obviously, a very popular marketplace to list RWA. So these things are hitting INX. And now we've got news that the tokenized version of the S&P 500 will also be arriving, as well as, I believe, the BlackRock's iShares Treasury, Apple stocks, and maybe some other products. So very big news from INX and Bakkt here, Kyle.
Yeah, no, I had a chance to meet with some of the Bakkt team while I was in Asia. Really impressed with what they've been able to do. And this makes total sense. I think it's exciting for INX. Now they can offer competitive, products in the stock market that are still tech companies, right? These are still kind of the high opportunity investments in the traditional stock market. I think it blends well from a product offering perspective from crypto, from security tokens, and from some of these tech stocks. So I think it makes total sense. And it will be exciting to see as they expand this portfolio. I'm sure they're not done with just these.
Yeah, no, it'll probably will send a lot of listings to INX, it looks like, based on this pattern. And
it's an interesting question. Like, at what point do you just only use these types of platforms because they do give you exposure, right? I mean, INX is kind of almost essentially going to be a competitor to something like Robinhood, which is taking it from the other angle, right? Of saying, all right, we trade all the stocks. Now we're going to try to add crypto. INX is saying we're going to add, take the crypto and security token side and add stocks. At some point, they will inevitably kind of offer the same set of services. And, hey, it's Hunger Games. Only one can survive.
And we know this because Vlad Tenev, the CEO of Robinhood, has acknowledged the benefits of tokenization and crypto, et cetera. It's no secret that that's where they're headed to. So it'll make for an interesting competition. But I love the fact that this is, in the United States, a regulated ATS that anybody can really go to, offering tokenized stocks. That is pretty unique and powerful. The last time, I don't think even FTX was available to U.S. investors, for example, right? So This is really cool to see that U.S. folks also have access to tokenized stocks like this. Would be really cool. But we got more news from Wall Street mega giant Guggenheim saying that they're tokenizing $20 million worth of tokenized commercial paper. Now, this isn't all that surprising, given, of course, all of the focus from TradFi institutions around treasury management products, and commercial paper, can be up in that category. It holds a P1 credit rating from Moody's, Kyle, which is really interesting, really strong, I think. And the development highlights Guggenheim's further foray into this space, which means we might see more and more RWAs coming from yet another, again, TradFi firm. It sounds like every week now we're going to keep seeing announcements similar to this one, I think.
Yeah, I've been a big fan of the Nick Carter concept of stablecoins being the killer use case of crypto. And it does, I think, suggest that potentially money markets and these types of products may be a killer use case for security tokens. We really have seen that over the last 18 months now. It seems to continually grow. We talked before about how rates may impact some of these products. But regardless of that, I do think this really does show that there's so much float in stablecoins. At some point, they're going to want yield on it. And I think a lot of these firms are doing these trials, which is great. What the ultimate inevitability is that with tokenization, this stuff scales really, really easily and really, really quickly. So once they get this under their belt, it's very easy to go from 20 million from Guggenheim to 2 billion or more. And with every one of these different firms now launching pilots and being comfortable with the technology, now you've got Moody's now is rated probably close to a dozen different products that use blockchain technology. You're starting to see TradFi really get familiar with the fact that, all right, this really is just an accounting methodology with respect to the technology. We're really talking about a traditional asset here. And once I think that shift has begun to happen, it really seems like it's all downhill.
I mean, shout out to Zeconomy for powering this as well. And I totally agree with you, Kyle. This is why many of those predictions, and maybe I'll make an official one by the end of the year, but I suspect we have a much more optimistic use case of how much is going to be tokenized, say, by the end of the decade, because of exactly what you just said, Kyle. The ease of actually being able to tokenize assets and securities it's not like it is super complicated that requires 6 to 12 months every time to pull off. So as soon as, to your point, this infrastructure is set up, it's very easy for them to scale, like really easy. And we're going to see those numbers get really, really big very, very quick. Moving on to another announcement here about Tokeny bringing almost $5 billion in gold reserves on chain with AMA Ambiogo. I hope I said that right. But they're located in Brazil. And this is something I talked about with Nico last week on the show, but they're also exploring that same concept that these gold bars or gold doesn't need physical extraction. And of course is an environmental play, right? Of course, being out of Brazil, it makes a lot of sense, being home to a large portion of the Amazon, et cetera. So I think we're going to keep seeing this trend, Kyle. Gold in the ground, future gold tokens, if you will. What do you make of this?
Yeah, I think this makes total sense. We've talked about not only tokenizing real owned gold, like from some of the Troy products that we've seen before, but we've also seen rights being tokenized where the assets themselves aren't even pulled out of the ground. Certainly I think my travels to Asia did suggest there are a lot of island nations, and not that Brazil is a small or island nation themselves, but there are a lot of countries that see they have natural resource reserves. And it can be very difficult for these countries to actually monetize these exports properly. So much of it consists of having a large corporation come in and harvest, and then they can use the leverage of their scale and political ability to get unfair terms with respect to the resources themselves, or in some countries there's just general embezzlement or fraud or whatever. And so I think that there's a really interesting opportunity here for tokenization to bring these mineral rights and asset rights into the open market in a more transparent way, which makes a ton of sense. And the cool thing about commodities is just it's such a big market, right? As we've talked about with crypto, to add $1 trillion in market cap, you have to create so much value. Whereas with tokenized real assets, it's all already there. You just need to be able to tokenize it. And so just like that, Tokeny and Biogeo is able to add $5 billion worth of tokenized assets to the market just with kind of a snap of the fingers. And I think that that's where we're really going to see the security token RWA industry explode from a market share perspective.
No, totally agree that this is one of those great asset classes and commodities in general that will slowly more and more come on chain and prove out this value proposition in a different way. It's a building block, right? It's one of those pieces you want to be able to tap into for your portfolio construction, your DeFi applications, whatever it might be. And speaking of that, I'm sure everybody is excited to hear that there's another stablecoin coming to market. Just what we need. And in fact, it's by a well-known issuer already, Ethena, that's introducing USTB. So they actually have their USDE that we're familiar with, but this will be backed specifically by BlackRock's BUIDL fund. That's, of course, in partnership with Securitize. And it's meant to be, they say a safer, more regulated investment option compared to USDE, and it'll serve as alternative collateral. So this use case that we've seen BUIDL be used before, expanding margin and trading capabilities and using it as collateral, is definitely a strong use case that everybody relies on or is comfortable, I should say, with when BlackRock is the one behind the whole thing in this way of sorts here. So Athena's great technology, leveraging BlackRock in partnership here with Securitize to launch this new stable coin. Any thoughts on this one, Kyle, in terms of how you interpret this move? Is this great for Ethena? Is this very competitive for the stable coin, or is this just business as usual?
This is a really good question. And in our previous format to the show, we used to do the main topic. And I feel like stablecoins, stablecoins that bear yield through treasury products is a really fascinating main topic that one day, we can find a way to discuss in more detail. I think it makes sense, right? If you have a money market product that's spitting off yield, it is a cash equivalent, meaning there could be an equivalent dollar that's backed by the deposits. This does just kind of feel like reverse engineering. Like, I don't know how you buy the treasury product from BlackRock, but if you were to have bought it with stablecoins and then they issue you out a stablecoin, it makes sense. I feel like it's probably useful in a lot of interesting ways. The only thing that I'd be concerned about is the non-BlackRock money market fund products issuing stablecoins. It does start to feel like you've got like synthetic products that are being built on top of other products. And then what if you stake those into this thing and then you issue out a new stablecoin? At some point, you can lose the plot with respect to where the actual dollar is. And did we kind of create $2 out of one by using funny accounting? Not that that's what's going on here, but I could just, potentially see that as a credit risk factor in the future that I think that people should be aware of when they start to use these types of stable coins.
Proof of reserves is, as we know, a super relevant conversation when it comes to evaluating stable coins. And the only best way to show real-time proof of reserves is to make sure that those reserves backing the stable coin are all on chain. So if that is the future, that's what I also took away from your comment there, Kyle, right? Which is, in principle, all stable coins will back themselves on-chain treasuries and such. And as a result, there have to be at least as many treasuries as stable coins. And in principle, if there's over collateralization in these reserves, you're going to see what we talk about on the show often, right? Which is, in the traditional markets, you see, 2 for every $1 in treasuries. And that's just the expectation that that's going to happen here. Last week, Nico and I talked about the flippening between stable coins and treasuries.
Sure.
So, that'll be fun to get into, but we will definitely be keeping an eye on this race. Moving back more towards RWAs, got another big secondary announcement activity, Ethena. They launching their secondary marketplace. By the way, they're using Polygon, and they're listing the SID real estate token. So going to butcher this again, but Cito Immobilien GmbH, out of Germany. They've launched their real estate token with Ethena, representing about 20 million euros of a portfolio of properties in Austria. So that's where Ethena is based. That's who they're regulated by. And of course, they're leveraging Polygon, as I mentioned, which is really cool. So I'm excited about this, Kyle, because this is now another marketplace live in Europe. And it shows two things. One, that the RWA market is adding more marketplaces and more venues to trade in general, but Europe is really coming online and going to be a very competitive ecosystem, I think, where the US may have had some advantages, probably still does, but Europe's in a real great position, in my opinion, to become a very competitive hub for RWAs. Do you agree, Kyle?
Yeah, I think this is exciting. Major props to Ethena. I was unable to find in the article if it's kind of a direct listing, meaning that the portfolio is backed by 20 million, but the shares will kind of be fluid in their total supply based off how much demand there is, or if they were able to raise the full 20 million for the underlying real estate tokens, and now the asset itself is being listed on an exchange and handling that. So it's unclear to me how that works. Just because of where the market is, it would be incredibly impressive if they were able to raise the full 20 million for the full real estate property. Not that I'm doubting them by any means, but just I'd be very impressed for sure. So that would be interesting to see some of the deeper details there, of if it was more of a direct listing or if this is following a lockup of a complete fundraise and what that looks like. Regardless, this is another example of global tokenization and how, there is a lot of value in having an interconnected economy with respect to this stuff, and how it does build, I think, a more sustainable ecosystem for everyone moving forward.
Absolutely. I'm excited to keep an eye on this, Kyle, as well. And actually, another cool use case that came out with Polytrade and in a partnership with Another Block.
Another block.
To tokenize music rights, which we've covered in the show on the past. In fact, from the very early days of tokenization, I feel like music IP and sort of similar types of media have been a popular use case. They just never took hold. And then we saw it again kind of around NFTs. I think NFTs are a popular use case of kind of assigning access to IP, kind of like with Wu-Tang album and other things we saw, right? So this is no surprise that we finally made the stretch. They claim to have tracks from artists like The Weeknd, Justin Bieber, and Rihanna. It sounds like pretty legit. And of course, the concept is to be able to get the distributions from the royalties on chain through these NFTs. And by the way, they're NFTs. So this is maybe another topic. I love the concept of tokenizing music rights. Good on Polytrade and Another Block. I support all of it. But as you know, or maybe you have a different stance, but I tend to not really be a fan of NFTs that are securities, right? What's the purpose of creating a single access share of ownership when, you know, you can have a fungible representation and enable fractionalization and multiple people to participate, which helps with liquidity and all kinds of other things. So the concept of, you know, using NFTs as RWAs, it still doesn't really hit home with me. What's your take on all this, Kyle?
You know, my mind immediately goes to, I don't want to be a hater, but I've seen examples like this in the past, and it does seem like the record labels are the ones that really aren't huge fans of this. So that is going to be the difficulty, because as an artist, as a musician, you know, like everything that you do kind of depends on what the record labels want you to do, and what they're comfortable with. So that will certainly be, I think, the biggest hurdle here. We've seen companies like this in the past, notably Blau, Nathan Jones, and a few others from A16Z came together with the launch of the Royal platform that was inevitably unsuccessful in making this happen. We'll see. Hopefully they can do it differently. It's a great use case. I like the idea of it. I just think the execution can be very difficult, especially when you're talking about artists like The Weeknd, Justin Bieber, and Rihanna, right? These are not independent artists. These are not kind of crowdfunded style niche community individuals. These are very much establishment performing artists. And so I love the idea. If they can pull it off, I think it can be massively successful. It's just, I think there is certainly a lot of red tape to get this thing off the ground.
That's a great notion, especially knowing that, you know, there isn't a lot of incentive, to your point about the record labels. Like, why do they like this? Why encourage this? I think they need to see the future, and it's probably hard for them to see the opportunities that if a record label were to launch, say, a tokenization launchpad, they could attract, you know, better artists, be more competitive with other record labels, and possibly introduce new features, you know, faster distributions, real-time distributions from your royalties, which of course all artists would like, right? So, you know, and maybe some other cool concepts that they could
quantifying those benefits is going to be key. How do you actually outcompete the rest of the market? Which is why it always ends up seeming like these types of technologies work best with like up and coming platforms. Like if you find, you know, smaller artists or smaller record labels that want to break through and don't have the scale that a Universal does, but they're open to being lean or more flexible to try to outcompete in some new way. That's, I think, going to be the angle that potentially really helps break the ice here.
Yeah, no, I would love to see other agencies as well get into the game, like Creative Arts Agency and others. Like, I think they play a role in all of this too.
Oh, we do know Sony has their own layer too, and Sony is a big music label. So perhaps there's all these pieces are coming together.
And they acknowledged it. No, I mean, Sony Films, Sony Music, they're all a part of the Sony, you know, partnership. So it'd be hard to think of anything else that they would do other than to put their IP on chain, right?
That's
so
right.
I'm totally with you. Excited to see Sony kind of validate that, because that will help the other record labels and other players recognize this is happening. Moving on, we got $1 billion more coming in RWAs according to Plume, Kyle. So they say that it's solar, minerals, and Medicaid claims that specifically sum up to around $1 billion in RWAs that they're bringing to their platform by Q4, by the end of the year, they say. Over $1 billion by the end of the year is very exciting. You know, about $500 million of that is summed up into the form of private credit funds. They say 300 million in solar farms and about 120 million in Medicaid. Now, as we know, that doesn't quite add up to $1 billion. So I'm sure there's some other stuff in there that they haven't mentioned that definitely gets it to north of that $1 billion size. But any thoughts on this one, Kyle? Plume bringing a host of different assets all at once on chain.
Yeah, Plume is building a layer 2 solution. It's EVM compatible, as far as I understand. I think their test nets are live for now. They've done a good job of raising capital and building a lot of hype around the RWA narrative. Some of these use cases I think are exciting. I personally, as we've talked about quite a bit, I do like the credit products. I do like the minerals and the commodities side. Claims and accounts receivables, these types of things, I am not the biggest fan of. I think we've seen that tried before. You know, the Centrifuge guys have done a good job in building their brand in that space. And I still think they have not quite figured out how to make that whole piece work. We've also seen other companies try that as well. So that's not my favorite use case, especially just because I think the credit risk is too high on some of those things to actually make it work. But it will be interesting. Solar farms, I want to know how that's actually monetized. Is that like kind of a carbon credit ESG style of play, or is that energy usage that they're then selling the available energy? Very interesting things there. I think there's some opportunity from a sustainability side. So, go for it, Plume. I think that there's a lot of companies that are trying to do just the tech. It seems like Plume is not only just doing the tech, but trying to make the deals happen as well, which is going to be pretty key.
No, yeah, to your point, a lot of L2s, EVM compatible that are bringing a lot of RWAs on chain. It seems like there is little to no activity other than sort of what we saw with Biddle directly on Ethereum these days. But we got one more to talk about in this very lengthy market movements segment, which I love because that means there's a market that's alive and well. And I kind of wonder at this point, what asset haven't we talked about in this segment? And that is telecom. So in an industry first, Hawk Networks is introducing their new platform called Liquid Infrastructure. Nothing to do with Liquid, the blockchain for Bitcoin. But they are launching a telecom asset platform. The idea being that if you're a telecom, utilities, infrastructure in general, you could go to this platform, of course, to tokenize and presumably raise capital. Not sure if they plan to expand in their own secondary market or partner up with others, but we do know that they're using the Althea layer 1 blockchain for powering this platform. So telecom, which I don't remember having been tokenized yet, is a pretty cool concept that you could sort of tap into these sort of fiber optic networks or telecom networks and get exposure to that value. So any thoughts on this one, Kyle, as we end this segment?
Yeah, this is like another one of those, potential, pseudo main topic style discussions. So I won't go too long, but it is interesting, the blend between real world assets being kind of this umbrella term, not only for investments and for real, products like that, but also this growing term that I know a lot of people don't love, DePIN, which is kind of just like decentralized Internet of Things style of stuff. How do we connect all the different technologies of our world together? And is it realistic that it's going to happen from centralized entities, or is it just inevitably going to be in kind of a decentralized solution, or it's more data transfer than it is financial, right? A lot of RWA stuff that we talk about is more financial. That's more of the communication and data layer of how all these things talk to each other. And so it seems like that's really what they're focused on here with fiber optic networks and communications and a lot of these things. It makes a ton of sense to me, right? I think that that a lot of these infrastructural projects are not built for 2024. And so the more that we can kind of incentivize infrastructure development that is fit for the new age, I think makes a lot of sense, but it's certainly one that is incredibly ambitious. We've seen guys like Helium try to build similar projects from I think a telecom perspective. So I would be interested to see if that's a potential partnership with them to do some of the stuff. But yeah, I've heard of Hawk Networks 1 or 2 times in my life, and so I'm excited for them to continue to drive this out.
Yeah, no, it would be cool to see and hopefully see this be successful to prove out this concept of getting exposure to, yet again, an asset class that most people don't really get exposure to unless you go buy Verizon or AT&T or whatever on the public market. So I am excited to see what kind of stuff they come out with. And to your point, that maybe there's more to this than just sort of simplifying funding and other things, but more back office management for this type of data, not financial data related to this stuff. So we'll keep an eye on that, but that's all we got for the market movements. Now, we do have more announcements coming up from the industry, but before we do, we've got another amazing interview, this time with Maredith Hannon from WisdomTree.
Welcome back, everyone, to another Security Token Show interview. This week, we are joined by Maredith Hannon from WisdomTree. Maredith, how are you today?
Good. Thanks so much for having me, Jason. Really appreciate it. How are you doing?
I'm doing fantastic. Thank you for coming on. We saw some very, very exciting news coming out of your wheelhouse, which is WisdomTree Connect. This is essentially complement to your previous product, WisdomTree Prime, which is an app on iOS. So tell us about Connect. What is this new product?
Sure. Yeah, we're super excited about this. And as you mentioned, this is really an expansion of our existing product suite. So we have WisdomTree Prime, which is our direct to retail facing app. Like you mentioned, it's a phone-based app where we're really abstracting away all of the complexities of blockchain and enabling retail investors to get on their phone access to saving, spending, and investing. And there's elements of utility to blockchain that we think can really be realized by using tokenized real world assets. So really, really excited about that product. But then there was this opportunity, what about our retail investors? And we started to have companies and especially crypto native firms come to us say, this is really cool what you all are doing. You have 13 tokenized digital funds. How do we invest in them? And we thought that this would be a great opportunity to build out this platform to offer institutions a way to access our tokenized funds through their own wallet infrastructure. So this is really exciting because it's the first time that WisdomTree tokenized funds are able to leave our own ecosystem and are able to be held in a third-party wallet. So really, really excited about this. And again, that's really adds on a new layer of utility for institutional investors while still really at the baseline and foundationally focusing on the main benefits of transparency, liquidity, and standardization that tokenization brings to the table. So really, really exciting and just launched last week. So in the first few innings here.
Oh, wow. Well, that's extremely recent. And I'm glad that you bring that up, right? It's, when we talk about institutions coming on chain, it's no secret that compliance departments definitely have their own say as to, what can and cannot happen and how things evolve. I think the relationship that you probably have with existing institutions is a huge catalyst to be able to, bring some of that credibility to this platform. But with that said, you did mention that there's going to be, third-party wallets involved, which opens up to, peer-to-peer transfers, as we saw in the press release too. How does that get facilitated in terms of making sure that it's only to people that are already onboarded to WisdomTree?
Sure, really good question. And so when you are onboarded with WisdomTree Connect, you connect your wallet and you receive ERC20 tokens of our government money market fund, WTGXX. What you also receive when you get onboarded is a soul-bound NFT that WisdomTree issues that is revocable by us, that pretty much says that we have vetted you, we have onboarded you, you've passed our KYC, AML checks, and that you can hold our tokens. So why this is important, and Jason, to your question about peer-to-peer transfer, is because it means that if I hold a WisdomTree money market fund token in my wallet and I want to send it to you, and you also are a WisdomTree Connect customer and have this soul-bound NFT, I can just transfer it to you. I don't have to go back to WisdomTree. I don't have to put in some sort of other order or go back to some sort of centralized repository. I can actually just peer-to-peer transfer it to you. And obviously, we're doing continuous checks from a compliance perspective about not only those who hold our tokens, but also the wallets that are on our platform. But we think this is really a monumental shift in creating a true marketplace for tokens outside of what the traditional finance system is. So truly us being an issuer, you're able to interact with our platform, but then you're also able to peer-to-peer transfer. There's obviously a lot of other opportunities that comes along with that, but definitely this is the first use case for it, and we're super excited to be able to offer it.
Really exciting. And I do want to touch on some of those opportunities later on, but while we're on the topic here, your product is, the first one available is the money market fund. So we did notice that it was issued on Ethereum, not Stellar, which is what we're used to seeing through WisdomTree Prime. Can you kind of walk us through the decision-making as to why Ethereum?
Sure, absolutely. So in our prospectus, we've had a Stellar and Ethereum for a long time. As you've mentioned, WisdomTree Prime is built on Stellar. As we were building out our institutional offering, a lot of the client requests were for Ethereum-based whether it's wallets or whether it's EVM compatible chains. So as we started to build out this platform, we really wanted to focus on what the client was looking for. And we have from the start had very much a chain agnostic ethos. And we think that this is a great opportunity to also build onto that mission. So being able to be minting onto Ethereum mainnet, we think is really exciting. And then obviously there'll be other EVM compatible chains to come down the line. And I think that's just a really important point for the industry as a whole, is that as we start to look like others in this space as well, as we start to look more broadly, to be able to really build out this ecosystem, to be able to really get to as many on-chain users as possible, and to bring more users on-chain, it's important for our assets to be where the end, whether it's platforms or whether it's issuers are. So this really enables us to also broaden our horizons, and it's our second chain that we're minting on, which is, I think, really exciting too from a technology perspective.
Yeah, no, absolutely. I think it's increasingly being popular to have multi-chain assets, which is great. You don't want to silo off any one audience, nor do you want to limit yourself as to, you know, what kind of applications are going to tap into later on as things develop. Sticking real quick with the money market funds side note here, we did notice, obviously, we all heard that the federal funds rate was cut by 50 bips. What kind of impact does that have on the liquidity products that are tokenized that we've, you know, kind of been seeing as a trend lately, including money market funds?
Sure. So from a liquidity perspective, these are still based on and funded by the underlying U.S. Treasuries market. So from a liquidity perspective, that it's still a very sound in the 20s of trillions of dollars of U.S. Treasuries traded a day. So I don't think necessarily there will be an impact there, but obviously from a rate perspective, rates being cut, there will be an impact. I think that's why our platform, though, and our offering is so unique to others in the industry, is because we have 13 digital funds. And why we came out with all of these tokenized products is that we have a full fixed income suite. So whether it's a government money market fund, all the way out through more long-term 30-year rates, also floating rate types of products, tips as an example, 1 to 3 years. So we have a full suite, so we can cover a lot of different aspects of the market, especially from an income perspective for the fixed income side. Also with equities, we have 2 products, more of a WisdomTree 500 and a WisdomTree Tech 100, and then also asset allocation models. So we really built our product suite that launched last year with this in mind, knowing that there were going to be rate changes, knowing that there were going to be market moves, and then ensuring that we had tokenized products to be able to allow our retail and now also institutional investors to build out a diversified portfolio depending on what they're looking for from a risk perspective or even a diversification perspective. So while there are obviously going to be impacts with the rate cuts, we feel really, really well positioned to be able to still offer investors what they're looking for and what they need from a product perspective. With that said, we're also always continuing to build out new products. So we will start to look at the market to see what else we can add. But I think we're in a really, really good place, at least as of right now, with the 13 that we have, as well as a gold product. 13,
that's quite the number there in terms of
it is.
By a single issuer. Which for our listeners, if you want to check them all out, we do track them on stm.co. Just filter by WisdomTree. You'll be able to see them there. We are already tracking the Ethereum version of WTGXX. So excited to see the other assets as they kind of also make their way on to Connect. But with that in mind, what are some of the other features that some of these businesses, institutions, or B2C players may be able to leverage through the WisdomTree Connect platform?
Sure. I would say to start, what's really important is that it's a seamless, secure, and easy to use platform. So this is, again, to really part of our ethos is around making this technology easy to access. So I think that's a really, really key important point. And so when you connect to your wallet, you're able to purchase and sell tokens really easily. And that includes through USDC and our stablecoin conversion service. So while a lot of crypto natives today, they need to sell out of their stable coins into fiat, purchase US treasuries or some sort of off-chain product, and then bring those proceeds back on chain. We have removed the friction from that process and have enabled our clients to truly just, with the funding mechanism that they feel the most comfortable with, whether it's USDC or whether it's fiat USD, to gain access to these products. So I think that's really, really unique. And I think that's something that from a timing perspective and even just, again, a friction perspective, I think that's really important. And really a differentiator here. We've already talked about the soul-bound NFT. This is one that I love to geek out on. I think it's super important as we go through here. And then I think too, from the peer-to-peer angle of this, I think this is where we really start to build out what this roadmap could look like. So today we have 13 digital funds. We added a second chain like we've already talked about. It's the first time that we have third-party wallet infrastructure, which is really exciting for our clients to be able to hold the assets the way that they want to hold them, and also gain access to all these products. But tomorrow, this is going to mean even more access to products, other chains, like I mentioned before about EVM compatibility, and then even down the line, building out a DApp to be able to provide these even more to the DeFi community in a way that I think is really unique to what the rest of the industry is doing.
TradFi and DApp, traditional finance institution and DApp are two things that we don't often hear in the same sentence.
In the same sentence, right? Yes. We're really excited. I think and if you think about it from a distribution perspective, it makes a lot of sense. Where again, we want to continue to allow this technology to for us to build with it and for us to continuously grow with it. So while we started this journey 4 years ago with WisdomTree Prime and building our offering for retail investors, now we're expanding that for the institutional product set. That really means that we do need to provide these assets in a different way. So very, very excited to be launching this and also to be gaining some traction in truly the DeFi ecosystem.
Absolutely. And we're just as excited to be tracking it all, keeping an eye out for what's to come, but especially the use cases. I think that's something that's so important, as technology evolves and applications evolve with them. The more that it becomes an easier argument to bring other institutions into the fold onto the blockchain and be able to leverage some of these tools for their own use, which is fantastic. It grows the whole industry, right? So kudos to you guys.
Thank you. Yes. And I think this whole notion around eliminating friction and bringing new utility on chain, whether it's moving between fiat and digital currencies or streamlining cash management processes, or really opening up regulated financial products to this ecosystem, is really something new and different and innovative, especially from a regulation perspective. I can't emphasize enough that these funds are effective with the SEC. They are regulated. They are 40 Act funds. I think that rigor is really important and something that we can bring to the on-chain community in a way that a lot of on-chain native companies and people are looking for.
Yeah, absolutely. And with that in mind, they are 40 Act funds, meaning, pretty much anyone can participate, including retail. Yeah. Hence why they're available on WisdomTree Prime. Is there a future where the Prime investors, investors on WisdomTree Prime will be able to interact with, people that hold versions of these tokens on WisdomTree Connect, or are we kind of siloing them off for regulatory?
Sure. Really good question. So for right now, WisdomTree Prime is our retail offering. And I think really the value add to WisdomTree Prime is that we are removing all of the complexities of the blockchain from, and I mean that from a wallet management perspective, a key management perspective, removing that from the client experience to enable clients to invest, save, and spend in a really, really easy way, where you don't need to know why you can buy a cup of coffee with your gold necessarily, but you can. And that is really cool. Or with a money market fund, or I could send you a money market fund and don't have to worry about how gas fees work, as an example. And I think that's really important for mainstream adoption. So I think that's huge. When we go through, though, down the roadmap, absolutely. And I think that's this notion of adapt, where there would be an opportunity for retail investors to potentially hold these in their own wallets. I say that with a lot of asterisks, though, from a regulatory perspective, from a KYC AML perspective. That's definitely the dream and the vision. We're not there today, but I think going down the line, it would be something that we're absolutely working towards, and I think would be something really interesting to explore. And that's our whole focus, and our whole strategy is around the democratization of finance. And even if you take a way big step back as who WisdomTree is, it's about providing investors with the best possible investing experience. And there's a lot of ways that you can do that. And we're going to explore all of them to, again, help meet our clients where they are and provide them with the best experience and the best exposures that we possibly can from a financial regulated products.
Fantastic. Thank you, Maredith. I think that, we're past the crawling stage, I think. I think we're starting to learn how to walk here. And soon we'll be able to gain some traction, enough traction to start running in this space. And you guys are definitely, one of the leaders in the pack, if you will. So appreciate everything you guys are doing. Of course, Maredith, thank you for your time and kind of sharing these insights with us so we can better understand what this product offering is. For any institutional people that are watching this interview, is there a preferred way that they get in contact with you or the team to start interacting with WisdomTree Connect?
Yes, absolutely. Well, you can absolutely find me, Maredith Hannon, on LinkedIn, on Twitter, X, or you can go to WisdomTreeConnect.com. There's a form that says ready to learn more. Fill it out. You'll get connected with me. And again, really, really appreciate the time. And as always, thanks so much for having me on.
Absolutely. Thank you, Maredith. And with that, thank you, everyone. Share this to anyone that you think may benefit. And we'll be definitely keeping an eye out for further announcements from WisdomTree. Thanks, Maredith.
Great. Thank you so much.
Wow, another great interview on the same episode, Kyle. I love to see that. Thank you, Maredith, for all that insight. It makes total sense that, of course, WisdomTree is not just targeting retail with their Prime app, catering to a different set of features, but also towards institutions with their new Connect platform. So I'm excited to see how that gets adopted and how much success they see. But we've got more announcements to cover, Kyle. I know the show's already getting kind of long, so we're going to try to sort of sum up some of these articles, and then let's tackle the ones that we think are the most interesting to talk about. But I'm going to start off with the institutional set of news here, Kyle, because it's some big news. In fact, whether you look at them as sort of a financial institution or TradFi or whatever, the first big piece of news is from Visa, announcing their VTAP, Visa Tokenized Asset Platform. You probably could have guessed that. Needless to say, they're planning to offer tokenization infrastructure. They've already signed BBVA, second largest bank out of Spain, and the concept is to be able to easily buy bonds and other commodities, I think they mentioned, and some other things. So interesting that Visa has now entered the arena with their new tokenization platform. And of course, there's more institutional news as well from JP Morgan's JPM coin actually being used to settle commercial paper from Siemens using SWIAT once again. So SWIAT consistently in the news regarding institutional activity. And now they've been actually made that bridge over to being able to settle with JPM coin. I think that's a pretty big deal on the institutional side. And then last but not least, Kyle, before we get into it, is that digital asset, the folks behind DAML and DTCC have officially said that they now have results from their collateral pilot using U.S. Treasuries. Obviously things like margin optimization and testing collateral, like we've seen BIT'll be used for using U.S. Treasuries. So those are the three institutional updates. Kyle, anything you want to share?
Well, Herwig, the one nice thing about Visa's terrible branding on their platform is that I feel like we can consequentially say that the war of tokenization versus digital assets, like we're still raging. But remember when everybody was like unhappy with the term tokenization? Visa loves it. And so because of that, we love them too. So I think that that's the big win from the VTAP platform acronym.
That's not the VDAP.
Exactly right. Exactly right. The other ones, I mean, all three of these news are actually pretty big. Commercial paper settling JPM coin on a different blockchain. I mean, all this is exactly what you look for in a blockchain solution, working with other chains and connecting different institutions together. And then, of course, U.S. Treasury collateral having significant benefits by using tokenization. We already know that, but the big thing that we've harped on for so many years now is how do we quantify that benefit? And it looks like Digital Asset and DTCC are working hard to do that. And so I'm very excited to look into these findings.
Yeah, no, I of course, totally agree. Moving on to partnerships, we got quite a few of them, of course, but they're usually pretty easy to digest what they do, right? I will start off with InvestaX, which is kind of unique and cool, saying they now have their InvestaX Earn product live using OpenTrade. We've heard about this. I think it was even covered on the interview with Julian Kwan, the CEO or founder of InvestaX. And, big news that they have finally launched that. We also heard from OpenTrade powering script investors to participate in U.S. Treasury bills as well as EU government bonds. Apex Group is planning to list assets on 21X, which is out of Europe, another regulated ESMA this time, marketplace for RWAs coming live. Onera also is doing interoperability with R3 Corda now. Abra and Praxis partnered up to bring tokenized RWAs and DeFi to network states. And last but not least, Actionariat, is listing RWAs on Taurus's TDX, their platform. So another home, another venue for Actionariat issuances. Kyle, which one of these updates or partnerships is worth discussing?
Well, spoiler alert, I am going to include one of these partnerships in my company of the week. So I'm going to let everybody wait and see what my thoughts are then.
Well, it's got to be at least one of those 6 that I just mentioned. I will add my own 2 cents to say that I am very excited to see 21X go live. Onera continues to be on a partnership tear. And again, Actionariat listing assets on Taurus, like Europe, folks, it's coming online. It's going to be competitive. That's the takeaway I'm seeing from this. But before we get to the companies of the week, we have 2 more articles to cover, specifically from sort of regulation side of things, starting with Qatar. Their QFC, the SEC equivalent, now has officially a digital assets lab and already has their first participants announced in part of their first cohort, if you will. And Hong Kong also, their EHKD, their CBDC project is expanding into tokenization and programmability, aka they're making their first test cases and starting to actually use it in action. So business as usual, I'd say, for these up and coming jurisdictions that are trying to develop ecosystems. And a very popular way to do that is, of course, by having a sandbox. So it's great to see that Qatar is doing that. It encourages participation and gives comfort to the builders, the innovators that want to launch RWAs in that jurisdiction. And of course, the CBDC activity is no surprise. We're going to continue to see years and years of more pilots and tests. Last week, we announced 100,000 people in Korea will be trialing a CBDC for groceries, right? So this is going to keep on happening. But I will say, to end my piece here, Kyle, is that it does seem like Asia has a fascination or a huge interest in leveraging CBDCs, whereas the further you go west, the more it becomes more of a polar topic. In Europe, you're kind of in the middle because it's still Europe. But I think when you come to America, you've obviously got quite more of a resistance to the concept. So, Kyle, anything you want to share on that segment?
Yeah, I honestly don't know where I fall on the CBDC argument. I still think I'm an intellectual free agent with respect to how I feel about it. I certainly know there are significant privacy concerns, but I think that anybody that thinks that they're private by using their credit card and tap to pay is not private. So I don't know how this necessarily like changes the current situation that much. There does seem to be some cool benefits. I think largely this actually doesn't affect that much for the retail consumer. I think it does provide accountability to central banks, which I think a lot of people actually are interested in, with respect to not allowing them to just infinitely print money supply, and at least forcing it to be somewhat accountable for the issuance that they make in seniorage. But again, I think that this is something I'm going to let play out and allow, we'll see what the East does and how successful it is or unsuccessful. And we'll see how the West continues to stay as a financial leader, despite not having interoperability with respect to the currency. That being said, as we know in the US, I think they're so good at just allowing private sector stuff to crush what public sector can do much worse. You look at the space program or whatever, right? So in the same way, having Circle and some of these other stable coins that are essentially a CBDC, but just large private corporations doing it on the behalf of the government is something that I wouldn't see as being unlikely as well.
Yeah, although we do know the FedNow program, of course, right. And to your point about kind of the private sector support, we do know, of course, SWIFT and the DTCC are also all exploring, infrastructure like this. So it'll be interesting to see, how that meshes with potentially some kind of a CBDC. But, I think, of course, there's the concerns around privacy and autonomy or freedom, right? The idea that you might not have it. But I also tend to agree with you on that point, Kyle. Like today, the government can freeze your bank account. They can do whatever they want that you're concerned about. They can get access to what you're spending money on. So unless you happen to also be using cash for all of your transactions, I'd be willing to bet that you're not. You probably, to your point, are not really enjoying these freedoms or privacy benefits anyway. But it is a slippery slope, that concept that, that's where we have to, be on guard. But I'm in the same boat as you, Kyle. It's hard to go against the efficiencies, the benefits. And for some people that, during COVID, I can tell you that they would have certainly enjoyed the other side of the spectrum, where they would have gotten an instant deposit for that $1,200 stimulus check, for example, if something like this existed like that. So, and of course, more efficiently and hopefully with, cost savings, which translates to us, the taxpayer. So, I can definitely see both sides, but that is not the point of this show. We're not going to debate CBDCs just quite yet. But we do, Kyle, have to pick a company of the week who made the moves this week. So why don't we go ahead and go pick them?
Herwig, gosh, it's that time of the week. I dream about the opportunity to sit up here like an award show host and discuss what is clearly the Guinness Book of World Records for our tokenized industry. This is not an award that is on a non-immutable blockchain. This is all on chain, aka YouTube, so that you can go back and see all of our winners. This is your chance to be quoted through history, solidified as a winner, as somebody doing unbelievably amazing things in the industry, except for one or two companies that we've used the company of the week to call out for doing something we didn't like. But aside from those, Herwig, this is an amazing opportunity to be nominated for Company of the Year award. How are you doing? You ready to wrap this show up?
Oh, man, I can just feel the weight of the pressure. Whoever wins the Company of the Year goes on to do big things every time. So
and it's all thanks to the award.
It must be. I can't put any other touch on why it could be that. Anything else? So let's get into it, shall we, Kyle? I'm introducing a new Company of the Week for the year, because you can win it. A second time or a third time. It just depends on who's made the biggest moves that week. And this week, I'm going to give it to Ethena, Kyle. Now, stable coins are growing. We've talked about the importance of that also influencing tokenized treasuries markets and all that growth. Stable coins continue to kind of suffer from that lack of confidence, whether it's concerns about proof of reserves or et cetera. I think the fact that Ethena is now creating sort of this more, as they say, more regulated, more safe product. And it's hard to beat BlackRock, the largest asset manager in the world, 5 times more assets basically than there is the crypto market cap. So if they're going to get into the $150 billion stablecoin game, that to me tells me just as much as I said about BUIDL when it first came out, which is I believe that BUIDL will become the largest tokenized fund in the world. It already is, but I'm talking about to the tune of trillions of dollars. That's where I believe this is headed. And of course, we recognize the relationship between treasuries and stable coins. They are different in terms of access and capabilities because tokenized treasuries and similar products are more regulated and such, making it harder for more people to use it freely, if you will. So I think the need and demand for stable coins are there, but they're both going to lift each other up, I think, in this regard. And I hope that Ethena can do a great job in winning over a lot of these institutions. Now, I think they're going to have a tough time. I will say that this competition is heating up, where I think if they didn't make a move like this, really saying, hey, we already have one, USDE, now we're going to launch this one. That is a sign that, they are willing to adapt. They see where the goalpost is moving in the industry. And they said, hey, we know the future will require a, important reserve asset manager like BlackRock to power the stable coin. So for all those reasons, Kyle, I got to give Ethena my company of the week.
That's a great win. I think it's a very nice rundown. And I agree with everything you're saying. This is the future. This is what's needed in the market. And despite some of my interest in some of the deeper lying technological pass-throughs here, it does make a lot of sense. And we've seen the success of BlackRock's fund. It only makes sense to have a stablecoin backed directly by those treasury products as well. And I guess it's interesting to see, will the stablecoin inevitably disintermediate the actual treasury product itself, where everybody just buys a stablecoin that's interest bearing and doesn't even really think very much about who's providing that yield. There's some, I think, some fun retail style discussions there to talk about in the future.
Absolutely. Well, Kyle, we can't end the show without hearing from you. So go ahead, take it away. Who's your company of the week?
Well, Herwig, I think a lot of people have asked me, over the last couple of days, what did I learn being in Asia for a couple months? I don't know how many of our listeners are either out in Southeast Asia or have had a chance to spend time there. And one of the themes that I was fascinated by before leaving, because my background, I did a lot of philosophy throughout my academic career, was this idea of network states and how the technology of the world is kind of being represented almost in the cloud. And how does that, how do we translate that into the physical world, which is so much of what we do with tokenized assets, is how do we take real assets and translate them into the digital space? And we can do the opposite. How do we take the digital cash and digital economy and bring that into some of these physical places? And so in Southeast Asia, there is a huge rise in demand of special economic zones and connecting a lot of these small island nations, a lot of these small places together, where they've realized, thanks to the power of technology, we can all band together in a way that previously was never possible. If you were a small little island, you had a bunch of natural resources, there's not a whole lot you're going to be able to do to connect into the broader ecosystem, and that seems to be changing. So my company of the week winner this week, Herwig, is Abra. Abra has partnered with Praxis, which is one of the growing network state communities, and they're offering all types of real-world asset tokenization and DeFi services to some of these different network state solutions, which again can be abstract with respect to these are kind of pop-up city style of communities, but I think it also does translate into some of these small nations that do have control over really interesting stuff. And this does seem to be a very interesting use case to drive real world asset tokenization. Some of these smaller economies that don't have access to stock markets, that don't have access to debt lending solutions, that don't have access to the broader economy quite as efficiently, are the ones that stand to gain the most from using tokenization, and kind of binding these things together to reach that scale that is comparable to a larger or more established nation or economy, I think is something really, really interesting. And so Abra leading the way on that front is something pretty cool, novel, and I think just generally good for society and for a lot of those underrepresented people.
It's hard to argue with that, Kyle. It's a very thoughtful choice. Could have copped out and said, Visa tokenized asset platform, INX and back doing tokenized S&P 500. Very cool stuff. But this clearly is why we choose the company of the week, because this is a very cool insight, Kyle. And I agree with you wholeheartedly. Would love to see their success here in this partnership and their expansion into network states. So, but that's it, Kyle. That's the show. So we'll have to hear more from all these beautiful, amazing companies again next week. But wow, what a show. Hopefully you all hung in there to the end here. And of course, we're going to tell you to go check out stm.co in the meantime while you're waiting for next week's episode. We've got all the latest trading information, all the latest news, a lot of great reports and coverage for you to go check out. Now, we saw a very nice, very appreciative comment last week on YouTube. So we thank everybody that gives us some praise, that thanks us for the hard work that we do here every week, because it takes quite a bit of hard work. So if you can, please go subscribe. Please give it a share and a like so that we can continue to grow our audience and continue to help the adoption of real world assets. Kyle, any closing comments?
You know what, Herwig? It feels so good to be back. Shout out to all of our listeners and shout out to the STM team for just continuing to grind day in and day out. Jason behind the scenes making it all happen, and everybody else on the team that helps put all this stuff together. I'm so thankful to be a part of what an amazing family it's been over so many years.
And so happy to have you back, Kyle. So with that, everybody, have an amazing weekend. Let's get into Q4 of the year, and happy tokenizing.